They said it would never happen, but Fidelity just filed something that could change the way crypto fits into traditional finance, and you'll want to stick around to the end of this video because I'm going to break down why this move matters, what it signals for Solana, and how it could spark the next evolution of crypto ETFs. Cboe BZX Exchange has filed a proposal with the SEC to list and trade shares of the Fidelity Solana Fund. And if approved, it wouldn't just be the first Spot Solana ETF in the United States. It would also be the first ETF to stake a portion of its holdings to earn rewards on-chain, giving investors exposure not only to Solana's price action, but also to its native staking yield, all within a regulated, publicly traded product. Unlike earlier crypto ETF attempts that failed due to concerns over market manipulation and the lack of a regulated market of significant size, Fidelity is using the exact playbook that got Spot Bitcoin and Ethereum ETFs approved earlier this year, arguing that Solana is traded globally 24/7 across major platforms like Coinbase, Binance, Kraken, and OKX, with billions in daily volume and a market structure so fragmented and arbitrage that manipulating the price on one venue would have no real effect, and with no central leadership or insider disclosures, Sol may actually be harder to manipulate than traditional assets, which is exactly the angle this filing is leaning into. What makes this proposal even more significant is that Fidelity isn't just replicating existing models, they're setting a new precedent by introducing staking rewards into a regulated ETF structure, giving investors a way to benefit from Solana's yield without having to navigate the complexity of self-custody or DeFi platforms. And that raises the stakes, because if the SEC approves this, it won't just be about Solana, it could open the door to a wave of ETFs built around other proof-of-stake assets like Avalanche, Cosmos, or even Layer 2s, meaning this isn't just a product launch, it's a stress test for the SEC's evolving approach to crypto, especially in the context of assets that don't have futures markets or centralized control. And Fidelity knows this, which is why they're not only emphasizing Solana's liquidity, decentralization, and 24/7 trading volume, but also the investor protection benefits of offering secure custody, consistent NAV pricing, and staking income all within a single transparent vehicle. If the filing goes through, it would mark the first time US investors could access Solana exposure and earn passive yield in a product that trades like a stock, and that could trigger a serious shift in how institutions think about crypto in their portfolios, not just for price speculation, but for income-generating strategies inside regulated wrappers. If you like this breakdown, smash that like button, drop your thoughts in the comments, and if you're not already doing so, make sure to subscribe. You won't want to miss what's coming next.